I'll record a quick little snippet here. This is why you should really study and understand candlesticks, because there's a story that's being told between the bulls and the bears, and that's all it is. It's a battle going on. But we're looking at Six Flags, ticker symbol SIX. This is a weekly chart. So for every candle, that is 1 week of trading. Looking back here in the history, 2020, all of beginning of 2020 leading all the way up to March right here, Six Flags was getting drilled down. Looks like from here at $40 or $38, it got drilled all the way down to a low here at $9 a share. Notice how big the bodies are on these candles. And then once the selling starts to get really extreme, notice the long bottom wicks on this. That's a battle going on there. So we're selling off, and then right here, really take note. We'll zoom in on this. The bears brought prices down, but then the bulls were able to bring prices right back up. So the bulls stepped in for a moment and battled the bears. Right here, you got a big doji, or a spinning top, they would call it, going on right here. The long bottom wick, the long upper wick, and then prices closed right at about the level where it opened for the week. So all this trading week, prices went down, prices went up, and then through the whole week, Monday through Friday, prices closed right at where they opened up for the week. So there's indecision there, is what you're seeing. So it would be important going into the next trading week to see which way the stock chart wants to go. Who's going to win, the bulls or the bears? As the week started up, you see right here, claimed this week right here. And as the weeks continued on, bulls stayed in control and prices lifted from that $10, that $10 area here, all the way up to a high of $21. And the bulls had control majority of the time. And for 1, 2, 3, 4, 5, 6, 7 weeks here, price rose up $11 a share. That's the importance I really want you guys to see with understanding candlesticks. A lot of people, believe it or not, they quickly just run through the education part in candlesticks, when you should really be taking your time with it and understanding how to read these candlesticks, because there's a lot of information within these candlesticks and on all different time frames for you to break down, to tell the story. The bigger time frame you spot this stuff, the bigger the move could potentially be. So with us spotting this on the weekly chart, it's gonna unfold all the way down to the intraday chart. But we're looking back in history to put all of this together. Now now that we fast forward on this chart in the future, when all of that went on right here at that $10, this had an epic run. It ran up here, got a nice retracement on it, and you should be looking at this from the low there all the way up to the high there. That's just a nice retracement down, measured move of like this. That's about a 50% retracement there. Retracements are good. You see the volume declining. You got the bulls chose their direction, nice retracement, rest, and then the trend continues to the upside. There's multiple different ways to break it down and put it all together, and it's up to you to do that. And by going back and doing this and putting it all together, you're practicing, you're training your eyes for when this stuff happens in the future, and you're seeing how it plays out. This ran all the way up to 51, and then it pulled back and it consolidated within this range from March, almost a year. It just went sideways here. Now it's starting to fall down, and you can refer back to the last time it started to fall down here for any type of pattern recognition or levels of interest for the stock to potentially bounce off of. So if you were to measure from this low all the way up to that high right here, a 50% retracement on this would be at around that $22, and where it broke from this wedge that it formed right there. So you'd watch prices to potentially fall all the way down here to 22, and then maybe get in on it for a nice little bounce on back up. It's just all about in the way you look at the charts and break them down. And believe it or not, a lot of people don't put in the work and go back and do this. So put that work in. Train your eyes to spot patterns, see how setups played out, and understand, most importantly, all it is it's a battle between the bulls and the bears. There's only 3 stages that a stock's going to be in. It's either going to be in an uptrend, a downtrend, or it's going to be consolidating. You need to identify where the stock is at in that trend. Who's winning? The bulls or the bears? Or is it a stalemate?